I'd like to welcome you today so that I can show you how you can average 2 to 4% daily return on your investment, and you'll never risk more than $100 per contract traded. That's right. My name's Michael Guess, as Renee said, and thanks again to her and the gang for sponsoring me. I'd like to share with you today how an objective, rules-based, mechanical trading system and professional coaching will finally bring you that elusive holy grail of trading that you've all been trying to achieve: consistency. And here I am. That's me in the corner. As she said, I've been doing this professionally for about 23 years. I founded TradeSafe over 19 years ago. I've graduated over 3,000 students. I've created a multitude of indicators and mechanical trading systems. And in a past life, I was a psychotherapist, so I'm very equipped to handle the all-important issue of trading discipline. You don't want to revenge trade or get analysis paralysis. But let's go ahead and kick this off and ask you to look at the right side of the screen. You see that chart? I'd like you all to type a response, if you would, please, and tell me, is there something the matter with that chart? What is it? Let me make sure that you're all really here and responding so I can answer questions, because I encourage questions. So what's the matter with that chart? Everybody? Let me get a few responses. And I'm hoping I'm looking in the right spot, Renee. Not seeing any responses yet. Okay, well, I would like to be able to answer questions, so want to make sure people are actually hearing me also. Would someone type a yes and let me know that you're able to see and hear this presentation?
It does look like they're responding in the questions box.
Oh, and the
You're looking in the chat,
questions,
not there.
my bad. I was looking in the private chat. There we go. I appreciate the feedback and guidance there, Renee. I should have known better. Okay, let me go ahead and put this other one back where it came from and put the questions one where it belongs. Okay, hang on here. Where is questions? It disappeared. Oh, shucks, I should know this. Well, I'll tell you what, I'm not going to waste any more time. It looks like I'm not going to be able to look for the questions. I will provide you with a way to ask me questions later. Folks, I'm sure you noticed what's the matter with that chart on the right. Way too busy, way too much information, overwhelm. And honestly, a lot of people think that all you need are some indicators. You know, with all due respect to other presenters that you're going to see today, indicators are not enough. You know why? If you don't have an actual rules-based mechanical trading system that shows you what to do, when and where to enter, when and where to exit, you're going to be left to guess. It's subjective, but a true mechanical system is not subjective. It is totally rules-based. It's proven and back-tested, in our case, over 20,000 trades. And all of this is made possible because of something called cycles. And I want a lot of people to know that even though this trade-safe system is a trend-following system, which is frankly the simplest, easiest to use, and most profitable overall, a lot of people don't realize that you can actually use it in day trading, and you don't have to sit there all day long and be glued to the monitor and get hemorrhoids and eye strain. You can actually do part-time day trading. So if you only have part of the day available, you can do this. That's because, kind of like that camcorder over on the right, it has a zoom lens. You can zoom out and see the big picture using a higher setting chart and see what the price action is at a higher level, and zoom back in to smaller and smaller chart settings. All right, just a moment here. I am seeing some responses. Okay, hang on here. Nope, I'm looking in the wrong spot. So let me keep going here. My point is this. If you're looking at a single chart, you are putting on blinders. You need to use multiple charts, multiple time frames to use that zoom lens feature with your intraday trading. You want to know whether the overall market for the intraday is up or down. You can't see that on a 1-minute chart. You're looking at too narrow a slice. So you want to be able to look at the wide angle view, zoom in more to see the dominant cycle or trend, and then zoom in all the way in to the smallest time frame so that you can have what I would call low risk surgical entry, the smallest possible risk, and still be able to take a trade. This combination allows you to adapt. And so by adapting, you can be able to take what the market can give you. That's right, because every day's different. You've got to be able to adjust to what the market can give you. No one size fits all works. So how are we going to do it? We're going to use something called ratios. You see those three charts there? The biggest chart, the one on the left, it's in a downtrend. And if we were to zoom in 300% and look at the middle chart, that one's about a 3-to-1 ratio. You can see more detail, more granular information. And to get the smallest possible risk, you zoom in another 300%, and that's the one that you would use to take your trade on. This way you avoid that one-size-fits-all approach to trading that beginners often don't realize. This allows you to custom tailor everything based on the strength of the trend. Now, some of you may not realize that. You just say, well, a trend is a trend, right? No, there is actually the strength of the trend, and it depends on what the market is capable of giving you. So the more of these charts that are trending in the same direction, the stronger the overall trend. It's kind of like a baseball metaphor. If you have a lot of wind at your back, you're going to swing for the fences. You sure wouldn't want to waste a trade on a scalp, right? But if you don't have much trend agreement, maybe only just a couple of the charts, and I'll give you the rules. I'm actually going to give away a lot of information here today so that you can try it out yourself. But if you don't have much trend agreement, well, then yes, you'd scalp. You would want to bunt and get on base. So here are the ratios that I'm going to give to you that if you wanted to trade the indexes, the indices, we all know what the Dow, the S&P, the NASDAQ, and the Russell are, right? Well, the TradeSafe system will work on all trending markets, and there's thousands of them. But for the sake of just this example today, I'm going to focus on the indexes because that's what a lot of people like to trade. So if you want to trade the indexes, here are the settings that you would use. A 9-minute chart gives you the wide angle view. The 3-minute chart gives you the dominant trend for perhaps an hour or two. When you get what is called a setup, and I'll show you what that means, you will want to use the 1-minute chart. And these ratios are 3-to-1. That's very important. But sometimes you don't get a setup on a 1-minute chart, or maybe the risk levels are too big for a 1-minute chart even. You can supplement that and get additional entry opportunities with tick-based charts. So in our system, we let you enter on either a 1-minute chart or specific settings on tick charts. So the symbol that I would use for the 9-minute, let's say it's in an uptrend, and the 3-minute is drifting down casually, but the 1-minute's in a strong rally. Each of those charts, each of those settings exist in its own universe. Notice that they're at odds with each other. If you really want the best odds in your favor for the most follow through, you want all of the charts to be trending together. So here is another giveaway. I'm going to give you the rules that we use in the TradeSafe system so that we know how to manage and exit our trade. That's right. We don't use a one-size-fits-all exit strategy. We actually have 4 different automated exit strategies. Two of them are scalps and two of them are scaling out. Here's how it goes. I teach my students a rhyme, a teaching mnemonic, so that they can remember how it goes. And it goes like this. The minimum is the 1 and the 3 need to agree. Best is if all 3 agree. That means the 9, the 3, and the 1, and that includes the tick charts, are trending together. This gives you the potential for a really strong follow through. And that means you don't want to waste that trade on a scalp. You want to choose an exit strategy that keeps you in the trade longer. And you want it to be an automated exit strategy so you don't have to guess where to get out. A scaling out exit strategy is perfect for that. But let's say that only 2 out of the 3 charts are in agreement. That would be the least amount of trend agreement that you would want to consider before you would think about even taking a trade. You'd want the entry time frame and the next higher time frame. That would be the 1-minute chart or a tick chart along with it, and the 3-minute. So you have some potential for a trade that'll have some follow through, but maybe won't go very far. Well, don't stick your neck out on that trade. Go ahead and get all in and all out at a quick and easy to reach target, and that would be called a scalp. So this approach gives you a real roadmap to winning consistently, because that is the holy grail, consistency in trading. Okay? All right. Now, I'm still searching for where the questions are, and I haven't been able to find that. It's disappeared. I really wish I could see the question. Oh, there it is. I found it. Now I can answer questions. Okay, why don't one of you type yes and let me know that you are with me still? Just type a yes. Let me know you followed everything I've said so far. Does anybody have any questions? Thank you. All right. Hey, Michelle, good to see you. Michelle's over in Hong Kong. Great. And I'm recognizing some of the other names. Great. All right. Well, I'll tell you what, I've given you, since I only have a limited amount of time today, a very, very brief introduction to how the rules work. It's best if I take you to the trades themselves. I want to show you with actual charts. So let's move away from this screenshot. I'm going to pause my screen, if you will. I'm going to back out of the presentation for a moment, and I'm going to go to the charts. Just a moment, and you should be able to see my charts. Would you type a yes and let me know that you can see my charts? All right. And Paul wants to know, what minimum volume do you use? Volume is not even an issue in this system. You do not need to know. Okay? All right. So I can answer questions about specific markets, about how much do I think is enough volume. It really depends on the size of the trade that you want to take. Are you trading 2 contracts or 20 contracts? Obviously, you need a lot more liquidity if you're trading 20. Does that make sense? I hope that answers your question, Paul. All right, let me give you a quick tour of what the charts look like here. I'm going to close this little window. It's called a data box. This is a readout. Wherever I move my cursor, you're going to see the readout. All right. Now, dead center, in the middle third of the screen, and by the way, some people say, oh, I need to have 6 monitors to follow 30 markets, and I've got all these dozens and dozens of charts open. Let me tell you, with my background in psychotherapy, I was a neurophysiologist, and I found out that the brain can't handle that much information. You are overloading yourself if you're using more than 3 monitors. And to prove my point, I'm assembling all the charts that we use in our system together in just this one monitor. You could even use a laptop. Of course, I recommend an external monitor that's bigger than a laptop screen, but in the middle is our main chart we take our trades on, the 1-minute chart. I mentioned to you that you can supplement your entries, get additional entries with the tick charts. And over here on the right-hand third, here is a 233 tick chart, and there's a 144 tick chart. So you might get setups on any of those. But before you get a setup, I would like to introduce you to the 4 steps to entering a safe trade. Very straightforward. The first critical step, as I told you before we went to the charts, is the minimum is the 1 and the 3 need to agree. Well, here's the 1 minute, here's the 3 minute, and if the 9 minutes in agreement, that's even better. So these are only for reference purposes to determine strength of trend. Once you know the strength of the trend, you don't need to look at them anymore. You're only going to focus on the chart you would take the trade on. So I'm going to first begin with the 9-minute chart, maximize its window. By the way, this software is called NinjaTrader. A lot of you use it. I noticed the previous presenter was using NinjaTrader. In my opinion, having used probably 2 or 3 dozen professional grade platforms over the last 20 some years, I think Ninja is the best. Now, some of you may say, oh, well, I use Thinkorswim or I use Sierra charts and so on. We have a saying here in Austin, Texas, don't take a knife into a gunfight. If you don't want to be low on the food chain, you need to use professional grade software. And that's why I wrote this mechanical system for NinjaTrader, which is an outstanding, easy to use platform that when you practice with it, it's absolutely free. So this 9-minute chart, we're looking at a frozen moment in the past. I'm using a replay feature that lets me replay a trade from somewhere in the past, and I'm going to walk you through the trade all the way from how you would assess the strength of the trend, getting into the trade when all the rules are fulfilled, and all the way to the exit. So right now, you're looking at the price action. Yes, I know they're candlesticks. No, we do not use candlestick theory. I don't personally feel, even though I understand it, I know Gann, I know Fib, I know Elliott, I know all of those things, but I haven't found them to be consistent enough for my personal purposes. So I use candlesticks only because they're easy to see. Now, what else is on this chart? Well, we've got this rows of green dots. Those are automatically plotted by a swings indicator. And it is showing you your resistance levels automatically. By the same token, the gold dots, these are swing low pivots. They're support levels, automatically done. Now, this moving average actually doesn't even need to be here. The reason I include it is because it is important for taking a trade on the 1 minute or the tick charts. Why do I have it here if it's not needed? Because the brain, again, I've been a student of the brain and how it works for many decades. I've found that the brain loves consistency. So it wants to see the same things everywhere. So we include this moving average here, even though it is not necessarily needed. Now that I've given you the tour on the top of the 9-minute chart, let me show you why it's in an uptrend. Down below, we've actually got a pair of indicators sharing space together. One of them, as you can see, the red line that moves into overbought and oversold. I'm not going to tell you what it is. It's in the family called oscillators, and it either gets overbought or oversold whenever you happen to have a pullback, right? But the more important indicator is hiding behind that red line. That is our proprietary trend identification indicator, the trade safe trend indicator. It will reliably tell you, show you, even with audible alerts, it'll tell you. You'll hear sounds and let you know when the trend has changed. In this case, from green to this off-red salmon color, it's a downtrend. And we have a very special color band that lets you know which method was used. We have 2 proprietary methods that identify a change of trend. Well, we were in a downtrend until this point in time, and now we're in an uptrend. So the 9-minute chart is in an uptrend. Remember the rhyme, best as if all 3 agree. So the 9 is trending up. Let's go see what the 3-minute is doing. And yes, it is being recorded. You will get a copy of that from Renee later on tonight or tomorrow, okay? And by the way, I am going to provide you with a longer recording once I get the list of people who attended today, I have a full length recording that goes into much more detail that you will get a copy of. All right, let's go look at the 3-minute. Here's the 3-minute. Now, the 3-minute has, during the period of time the 9-minute covered, had many changes of trend. Most recently, it's in an uptrend. It's green down below. So if the 9 is up and the 3 is up, let's go see what the 1 is doing. And this is where we're going to stay for the rest of the trade when we start it and finish it. It too is green down below. It's straightforward. It's simple. You would have, if you were fixing a sandwich in the kitchen, you would have heard an alert and you would have come back and seen, oh, it changed from down to up. I'd better start paying attention. This is what lets you trade part-time instead of sitting there glued to your chair all day long. So let me move this more in the middle, and I'm going to give you a little bit of an illustration if I can. This is not a drawing program after all, but I'm going to show you how trend following works with our system. Let's say that you have an up move, kind of like you do right there, that little brief impulse move. That's called accumulation. And then you have what's called distribution, some profit taking. It's not a change in trend. You're still in an uptrend, but it's a simple retracement. And what we do is in our system, we're looking just like right here. It's got an impulse move going, and we would be looking for a retracement down to that moving average I showed you earlier. Here it is on the 1-minute chart. I can't repeat it here because the drawing tool doesn't let me do that. All right, so the second step after you have trend agreement, at least the 1 and the 3 need to agree, best as if all 3 agree. Well, we do have all 3 in agreement, and we're going to use an exit strategy called scaling out. Let me take you inside the guts of NinjaTrader and open up something called the control panel here. This is where we have a series of automated, pre-configured, pre-programmed exit strategies. This one is a trade safe scaling out exit strategy for the NQ, the NASDAQ. It will take profit at $100. That way you're hitting an easy to reach target. You've got a paid for trade. You can relax. And then we're going to want to trail a profit stop. So let me go ahead and close this back up. The second step after you have trend agreement is this retracement to the moving average. Now that's been around a long time. It's as old as dirt. But a whole lot of other people who try to trade these pullbacks, these retracements, they found out it's pretty subjective. They say, well, when do you get it exactly? Some people say, well, when it turns up. Well, there's a lot of differentiation. Is it the moment you see the first tick? Is it this? Is it that? That's the problem when you don't have an actual system with actual precision, with real notifications. So in our system, we require a very specific angle, preferably about a 90 to 45 degree angle. We want to have a certain minimum number of bars in that pullback. We can't have it just spike down in 1 or 2. And you want to make sure that the last bar, the deepest bar in the pullback, let's say you had one right here, and the moving average is just underneath it. Well, even if that was close enough to be within tolerance, if another bar went even further, it would be the lowest point in the pullback. I'm not drawing the other bars. This would be what we call a setup bar. Now it's obviously making contact, or would be if I could draw it, with the moving average, as you'll see in the trade shortly. But sometimes price doesn't quite make it to the moving average and still has good odds of being a successful winner. What about if it went over past the moving average? It went below the moving average. Same thing holds. If it's within a certain zone, a tolerance level, so many ticks away from the moving average, then that's okay. Well, we have an indicator that measures that tick by tick. It's right down here. If I were measuring it like right here, it would say, look where it says Rule 21 in the lower left corner of my screen, it's showing that it's 1 tick away. If it was touching, it would say 0. If it was 3 ticks and so on, okay? So my point is this, the second step is extremely precise. You already get really clearly identified trends. You also know that you've got a pullback that's within tolerance. And finally, you want to get independent confirmation. That's what this red line, the oscillator, is for. You want it to come down into oversold. That's independent confirmation. Real straightforward, cut and dried. We don't use that to put us in the trade if it turns out we just want it to get into oversold. The final step is risk. We keep our risk at or below $100 per contract if you're scaling out. If you're scalping, we keep the risk at or below $70 per contract. And even though those seem like tight stops, we actually get stopped out less than 13% of the time. That's right. We average 87% winners. And those are my students taking those trades on their own without me showing them what to do. So with that being said, risk is important. How do you know if the risk is too much? Down here where it says risk amount. If I put my cursor on this last bar right here, it's showing the risk is $50 per contract. So that's okay if you are doing either a scalp or a scale out. When all those conditions are met and the timer reaches 0, then you're going to park an order 1 tick above the high of the bar, like that. And you're going to let price action put you into the trade. And you are actually taking advantage of what is called a snapback. This is like a rubber band coming down to the maximum point when all the conditions are met and it's clearly done. And then, boom, you catch the snapback, the follow through, and you will trail your profit stop in the case we're going to get. Because I have a limited amount of time, I can't go into a lot more of that. You'll have to watch all of that in the extended replay that you'll have access to. So let's get underway with the trade itself. I'm going to turn on the replay here and we will get into the trade. I'm going to speed it up quite a bit and then I will slow it down when we are within the tolerance level. Right now it's still trending up. We're waiting for the retracement to begin. It is beginning. Watch it, watch it. And as it's coming down, notice that the oscillator's just now gone into oversold. And I'm going to pause. You have your retracement. It's completed. It's even touching the 21. The rule 21 says 0. So we are fulfilling steps 2 and steps 3. How much is our risk? Now, really, we're going to wait until the last 3 or 4 seconds, but right now the risk is only, look in the data box, $35 per contract, okay? So that means that we're going to park an order 1 tick above the high of that and put the trade on. So it looks like I've only got 15 minutes left. I'm going to have to pick up the pace. So what I'm going to do is turn this back on. I'm going to show you how we actually park an order using NinjaTrader. We will make a right click and we will put a buy stop limit order in for 4 contracts, 1 tick above that bar's high.
Order pending.
Computer talks to you and says order pending. I'm going to speed it up a little bit. And
order filled.
And once you're in the trade, you get automation. You get a bracket, an OCO. Here's your stop. Here's your first target. This is where you entered. You're going to actually tighten this stop up to the bottom of the bar that was your setup bar and back off 1 tick. And we are going to try to hit that target and scale out at $100. But guess what? What if it doesn't reach that? What if it gets almost all the way there and turns around and it becomes a loser? That's very frustrating. I'm going to show you we have an algorithm that's automated. Ask yourselves as I'm speeding things up, would you have bailed out because it got too close to the stop? Well, that's subjective trading, not rules-based. Now watch what happens. The red line representing the stop loss order, it will actually move up to where you entered, break even, and 1 tick of profit when the algorithm is met. Now you might have tried to jump out and you would have wasted the trade, but watch the red line. There it is. You now have a can't lose trade, at least a one ticket profit for 4 contracts. That's a $20 winner, but we're going to go ahead and turn it back on and speed it back up and let it go through the target.
Target filled.
And you've scaled out more automation. Here is your stop, still at break even and one ticket profit, and it's resized itself from 4 contracts to 2 because you already took 2 off the table. You have 2 contracts of $100 profit in your pocket. Now what do? I'm going to speed it up again and show you how we trail a stop. And I'm going to speed it up not too much, I hope. And watch the blue dots. That is our trade safe trailing indicator. Now, every time a blue dot plots itself, you're going to move your trailing stop up to that level and use a one tick offset. You have a full 60 seconds to do it. There is no pressure, no rush. I'm going to speed this up because of the limited amount of time. I'm going to take you all the way to the end of the trade. Just know that in normal conditions, you would have been every 1 minute, every 60 seconds, you would have moved the stop. Now this trailing stop is like a surface to air missile. It adjusts its rate of closure and its angle, etc., based on how strong the market is moving. It'll hang back and give breathing room automatically. And if the market starts to stall and go sideways, go into congestion, or maybe even backfill, it'll rush up and lock in more profit. Please assume that you would have been moving that red line right along with where the blue dots are. So I'm going to go ahead here and wait till the trade is almost over. And then I will have to slow it down a little bit so that we don't overshoot. All right, see how close it is? It's getting the meat off the bone. It's very, very close. But we use a one tick offset. We're getting other alerts in the background for other charts. And I'm going to slow it down to normal, and I will move it the final time. You would have been actually moving it each and every time. I'm locking it in at that closest point. Let's speed it back up a little bit more and let the market take us out of the trade. No guesswork about how to get out of the trade. You've seen the automation. Now let's see how much profit having all the guesswork taken out can make you. A little bit longer, a little bit longer. Be patient, be patient.
Stop filled.
All right, let's pause and let's open up Chart Trader and see $810. Now, I'm not saying every trade is going to be that much. Of course not. That's why we have 4 independent, discrete strategies, because the market gives you different amounts of trend strength. So I'm asking you, give me a big yes if you like what you see here, the automation, the flexibility, no guesswork about getting into the trade or getting out of the trade. It's done for you. It's a true mechanical system. All right. So with that being said, I'm going to actually switch back to the rest of the presentation and wrap things up here. Again, you will get a copy of a longer presentation. And here we go. Trend following is definitely the safest, most profitable form of trading. That's been irrefutably proven for over 100 years. Yes, you can scalp, Diane. I said that. You can scalp, you can scale out. You've got different exit strategies and they're automated. This is not a one-size-fits-all. Please watch the replay to be sure you don't miss anything. And this is all made possible because you're using multiple time frames. The more of them that agree, that is going to dictate which exit strategy you'd pre-select before you even enter a trade. You'd already know before you got a setup for a trade how you want to adapt to what the market can give you. You will know that you're going to keep your risk under control. Never more than $100 per contract traded. That's if you're trading the minis, and 70 or less if you're scalping. This gives you the automation that you need. It's a true mechanical rules-based system. It is absolutely Boolean logic, bulletproof. There is no guesswork. So if you've ever said, I'm not getting the results that they showed me when they sold it to me, this system does it. So you're going to have extreme precision going in. You know the trend agreement. You're going to know that you need to have your retracement within real tight tolerances. You know you have independent confirmation with the oscillator confirming it, and you know you're keeping your risk under control. Unless all of those steps are fulfilled, you don't even place the order. And you just park the order and let the market put you in the trade with the snapback, and that gives you consistent results. Now, there are other mechanical systems out there, and I'm just going to tell you something. A lot of you are new to trading, and you hear people use the term system. Well, they aren't speaking truthfully. The truth of the matter is there are perhaps maybe a dozen actual mechanical systems on the market today. That's it. Everything else are just indicators with a few loose rules, and they're very subjective. True mechanical systems start at about $3,000 and they go well past $10,000. Now, I'm not going to ask you to invest that much, so don't worry. But even if I were to put the trade safe system at the low end of the $3,000 spectrum, you're going to get more than that. You're going to get me in your corner. I've been a professional trader for 23 years, and I want you to know that even though I bill $500 an hour for my corporate clients, and I get it, you're going to get me for a solid 90 days of personal coaching, hands-on coaching in our coaching room. You're in a trading room where you don't just watch and copycat. You are having me show you how. I'll show you going into the trade, during the trade, give you a post-trade analysis, including a journal to journal your trade. Your stats are being recorded in a spreadsheet, a business plan to manage everything. It's all there. And you can even talk to me in my coaching room. You'll use a headset. You can ask questions anytime. And if you need help, I can look at your charts and watch you take the trade. Nobody in the entire industry does that. So with that being said, let's add some more value. I want to get you up and running. I took a full weekend webinar and I recorded it so you don't have to take off a weekend of your time. I broke it into bite-sized chunks. I used actual students asking real questions, and I broke it into those easy to watch segments. Now, that gets you up to speed on the system. To make sure that your charts are set up right, you don't have to build them from scratch. You get a custom workspace and charting templates that drop right into NinjaTrader. You will get that extremely powerful trend indicator that totally shows you trend direction. And I didn't have time today to show you, but it also identifies chop, congestion. It lets you know when you are in congestion, and it talks to you in plain English and tells you when you're getting a breakout. It'll say NQ NASDAQ breakout confirmed. And if you go back into congestion, it'll talk to you and tell you NQ NASDAQ breakout fake out, and so forth. You will also get all four of those steps with the precision indicators that are associated with them so that you know you have a legitimate setup. You will have all four of the automated exit strategies, 2 scalping strategies, 2 scaling out exit strategies. They're automated, so you don't have to guess where to get out. You will be walked through 3 basic phases, button pushing, so you know how to make mistakes on paper with sim trading. You'll be benchmarked at the end of the course so you can build your own authentic track record before you risk real money. And every one of my students are achieving 85 to 87% accuracy in their benchmarking phase. And I'm not even showing them what trades to take. They're doing it on their own. And the final phase is go start trading real money and make more money. Now, when you're in my classroom, all of our sessions are recorded and archived. I've got many, many hours of archived sessions, and you don't have to worry about if you miss one or part of one. You can go back and review anything you want. Plus, I've got a lot of special tips, tricks, and techniques videos in the archives. You naturally do get a comprehensive reference guide, a full color manual. You get a business plan not only to set up your financial goals, but to establish limitations like a real business should on what do you do if you get 3 losers in a row? What's your maximum that you could afford to lose in a single day? What's your percentage drawdown? Those are things that a real business and a professional trader does. You will get ways to track your performance, an actual spreadsheet that shows you how well the various strategies are working for you, so you can dial in the precise combination of tools that works for your personality, your temperament, because maybe you're aggressive and another trader is more risk averse. And of course, each and every trade, you want to learn from it, losers as well as winners. You get a pre-formatted journal. And finally, you get an extremely powerful technique to forge diamond hard discipline. This means that you will stop that self-sabotaging behavior, the revenge trading, the analysis paralysis. That's included in the course because I was a therapist in the past. I can help you with all of those things. And during the benchmarking phase I mentioned, my students typically generate about $3,000, usually up to $5,000. And when you add it all up, you've got close to $12,000 worth of profit, or not profit, you would want to call it that, but of value here. But are we going to ask you to pay anywhere close to $12,000? Of course not. Normally, we charge $29.95 for this entire package. And I've had student after student say this is underpriced. I've paid $10,000 and never gotten anywhere close to it. But we're going to give you a limited time special offer that is only good until Wednesday of next week at midnight. Instead of $29.95, and this is only for those who attend today, you can use this link, and I hope that Renee will put that in the chat window there. It's daytradesafe.com/market traders, and that's 2 T's, market traders. So that's how you can join up. But remember, that offer expires in 1 week. Well, you're going, well, fine, Michael, you haven't told me how much it's going to be. I'm going to cut a full $1,000 off of our normal price. For 1 week, you can get all of this for $19.95. So does anybody have any final questions? Let me see your questions before we wrap things up. I'm on time so far. And the usual question comes in, why do I not just trade it myself? Why do I offer this? For a simple reason, taxes. I'm pragmatic. My CPA told me 20 years ago I was making too much money with trading and I needed write-offs. I needed expenses. She said, form an LLC and teach what you know how to do, and you'll have a separate profit center. Plus, it keeps you sharp. So that's why there is Trade Safe. Well, if you think it's too expensive, then you probably have lost more than that in all of your trading. So most of the systems out there are way more expensive than this if you know anything at all about true mechanical systems. Otherwise, if you want to just keep using indicators and have subjectivity and never get consistency, be my guest. All right, let's see, another question. Can you, all right, Diane already said, can you scalp with this system? Yes, already answered that. Any other questions, folks? Any other questions? Remember, this is limited time offer. It's only good for 1 week at this link, daytradesafe.com/market traders, and that's 2 T's. And once we get the list from Renee, we will send out a separate email follow-up series letting you see a replay from a more lengthy webinar that goes into more detail so that you can better understand things, where I don't feel like I'm having to rush through everything. So yes, John, I answered that question earlier. You must have come in late. This was written for NinjaTrader. Other platforms, you could possibly use it, but you wouldn't get the automation. You'd have to use it manually. I give you an open box. This is a fully disclosed system. I don't hide anything. This is not a black box. You get all the settings and everything. Time for one more question, and then I'm going to turn it back over to Renee. All right, I want to say thanks to all of you for sitting in with me today. I look forward to taking questions. In the follow-up emails, you will get a link to scheduling time with me so you can talk to me on the phone and ask me any question you want. I will not twist your arm. It will not be a sales call. I never ever do that.